Oh. So if you can see me and hear me, kindly drop a message on the chat box. So good evening, everybody. So if you can see me and hear me, kindly drop a message on the chat box. So good evening, good evening, good evening. So I'm just gonna wait a little bit to see. Okay, George, thank you for that response. So good evening, good evening, good evening. So I'm just gonna wait a little bit. Okay, cool. So I'm just gonna wait a little bit for more people to join us, okay? Then we'll kick off. I want wait a little bit so that I don't go over and over what I'm what I'm going to be talking about. Okay. So let me see if I can. Let me go off a little bit from your screen so that I don't all right, Sunday and George. Oh, Afolabi. All right. Good evening, Femi. All right. So guys, so today I'll wait a little bit for more people to join us. Okay. I know this training is a free training, so everybody's but like I've mentioned, from next year, I'll only be dealing with people that are in my circle, people that probably that bought the course, because I'm working on I'm fine-tuning some of the courses that we have out there, I'm updating it. So and also we are putting together a mentorship program so that we can have, the goal is to have serious people that will be following, that actually want to learn, not just Gbogbo. So what I've been doing for the last 2 years has been Gbogbo. And then you will agree with me that, even if those Gbogbo videos or webinars that we have like this, if you pay attention, I mean, it's more than enough. I don't think you need any other thing, but just to ensure that I'm, speaking to the right people, and also people that want to grow. That's the reason why, I'm going to be attaching price to it. So I want to weed out on serious people. Okay. So, because I know that people value what they pay for. It's what people don't pay for that they don't value. All right. So, so today one of these we'll be looking at review of our trades last week. I think I've been doing a lot of postings. I have time to actually sit on my system. The past couple of weeks, sometimes I'm always up and down. So, but these days I've been paying attention. I've been having time to actually trade. So, having said that, so we're going to be looking at the trades that I called, some of the trades that I called a couple of weeks ago. Some of them that includes, I think, one of the ones that we're going to look at is, let's look at pounds. Let's look at pounds USD. So this trade, I think I dropped it in the group 2 weeks ago. I actually dropped this trade in the group 2 weeks ago. If you have been following me, you will notice that this trade, and I caught it around somewhere around there, this move, and I'm still in this trade, and I'm going to explain why I'm still in this trade. Some of the questions that I received, some people dropped in the Telegram group, that the guy said, let me go and look for the question. The guy said, I think it was, give me 1 minute. I want to look for the person. I would also like to make it to know when to, okay. He was talking about when to exit a trade. He said, why is it that, that you leave a trade on time? I used to be like that. I'll jump out of a trade, and eventually the trade will continue in that direction, especially if you are trading in a higher time frame. Now look at this move. Look at this move. Look at this move. Look at what price did there. I mean, if you enter this trade, if you enter a buy and you jump out early, this trade is going to pay you. It's going to pay you a lot. The question is, and I'm on the higher time frame right now, the daily time frame. You can see that you can easily see it at a glance, the way it is. If I go to the lower time frame, let me say 1 hour time frame, you will not, except if you kind of reduce the screen, but you will not see that move at a glance, that long move at a glance. So that's why I stay on the higher time frame, at least at worst case scenario. If I didn't get the direction market want to go, I'll come to the 4 hour time frame. If you look at the 4 hour time frame, see that you still see that move, that same move that on pounds USD. And I'm going to explain this. I'm going to explain why I jump on a sell on this at this spot. I think I've explained this over and over, but I'll just like a lot of people don't normally pay attention at when you're explaining something. So that's the more reason why I'll need you to go over some of the videos that I've done in the past. For example, like I always say, in trading is about learning. The learning is never ending, because this market that we are trading is a dynamic market, right? So trading is continuous. Learning is continuous. What I mean by learning is continuous, I really don't mean you are trying to look for you are trying to learn different strategies at every point. No. What I mean by learning is continuous is that if you have learned a particular strategy, if you have found a particular strategy that works for you, that actually works, you want to keep digging. You want to keep digging into that strategy until you are well established in that particular strategy. And like I've mentioned so many times, there is no any other strategy that you need in this trading journey than understanding market structures and liquidity. You don't need any other strategy. Once you understand that, that is all. And that's what I've been teaching for the past couple of weeks. I mean, since almost more than 1 year now. So having said that, let's look at what happened to pounds and why pounds is pulling back, and why I feel pounds should pull back. Remember when we had that study on when we had that training, when I put out that training on market structure, on basic market structure, we said that, how do you determine when a structure is building up? All right, that's the first thing you want to understand. So now we have something that looks like this. Price will do this. We have price take out, form a sweep of this previous low. This is in a bullish structure. All right, price will form a sweep of the previous low. Then we have a break of structure. All right, and the price will come toward this low and then do this. So this right here is a bullish structure. How do we come to the conclusion that this is a bullish structure? We come to the conclusion that this is a bullish structure because we already have a break of structure and we have a sweep of the previous low. All right. So right now, so this now becomes your protected low. This is your protected low. And we say this protected low is a low that we expected towards not to be taken out. So you will now see that price will come into this protected low and then move back to the upside. This is for a bullish structure. So don't forget that we now say from this protected low to this new high becomes our what? Our swing structure. So this, from this spot to this spot, becomes our swing structure. So what that is telling you is that as a market structure student, your focus now is on this swing structure. That means you will ignore everything that is happening around there before this structure is formed and focus on this one, this immediate swing structure. Okay, this is basic market structure. So now your focus now is that as price is now coming down, don't forget that we say that immediately after a break of structure, that is after price takes out this high and forms a new high, we expect price to do what? To pull back to the what? To the lower, to pull back towards this new low. Price will pull back to toward this new low and then do this and take out this high. So because we expect this low to be protected, okay, price can sometimes take out this low. This one. Price will take out this low. Most times, price will take out that low. And price will do this. Price will do this. Please pay attention. I can't remember how many times I've gone over this. So price will take out this low and then do this. So this is more often than not what I've been trading since all the trades that you see me taking. This is what I've been doing. This is everything. So, but then we know that this low here, then after we spoke about market structure, then we now went to liquidity. Then we know that this low is our what? Is our structural liquidity. This one here becomes our structural liquidity, where we now say that price, we say that structural liquidity is the last low before the main low. That's the protected low. So price will always take out the structural liquidity and continue. Now, before we go to structural liquidity, let's look at the basic market structure first. So price will give you this. Price will give you this. Price will give you this right here. This is your swing structure. This is where you want to focus on. So let's go and identify our swing structure first before I continue. Now, the first one, The first swing structure you will see on this daily time frame. On this this is pounds USD, right? You will notice that our swing structure, then we have swing structure within swing structure. I'm going to explain everything. And these swing structures open up stage by stage over time. So you notice that all our swing structure that we have, everything that we have, everything that we have on this spot from year to year is our swing structure. So I'm going to focus on this place from year to year. From this spot, to this spot is our swing structure. All right. But as price now continues, as price is moving downwards from here, as price is moving downward from here, when it gets here, we have a sweep of this previous low, a sweep of this previous low, and then we have this break of structure. We have this break of structure right here, and the price came down. Don't forget that each time we have a break of structure, after price break structure, price will do what? Price will pull back. Is a must. Price must pull back. It is a must. At least 99% of the time, this always happens. But you will not, until you study, you have to keep studying. That's what I always say. When you study hard, you trade easy. All right. So moving on, price will pull back from here. It will pull back. And then we continue again. There's another break of structure. So as soon as price pull back here, let me remove this thing. As soon as price has pulled back from here to this place, so this place now becomes our new swing structure from here like this to this spot becomes what? Our new swing structure. Sorry, from this spot, from here to this place becomes our new swing structure. So this becomes our protected low. This spot right here becomes our protected low. Let me name it. Let's say A. Let's call that place A. Okay. Guys, I hope you are following. I'm not supposed to be going through this place again, because I've mentioned it so many times. I'm supposed to just continue, but I noticed that some people don't really get it. So this become our B. If you are following me, let me know, please. So I'm just naming this place. Run this. Please tell me if you are following me. So this become our B. This our C. All right. So if I cut out, let me cut out this place. Let me cut out this place. I'm going to cut out this place. So sorry, this become our swing structure. Yeah, that spot. And so this is our new swing structure. Okay, I came all the way back to when was this? This was October 2023. I came all the way back to October 2023 to let you see where that uptrend, that GU, all the way that uptrend move. Where did it start? It started in October 2023. We are now in August 2024. That move, that uptrend move started in October. So, and I came all the way back to show you how it all started. So we have our first swing structure from there. We have a break of structure. We have, a sweep of this previous low. We have a break of structure. Then price came to form what is known as structural liquidity, okay, which is the last low before the main low. And the price took out this high to form a new swing structure, which is what I was trying to explain here. This same pattern, if you look at this pattern, it's the same thing as this pattern. So we have our protected low. This is our protected low. We have our swing structure. So we have our structural liquidity. Okay. And then we now have our new high. So, and I said that if you look at what I have here, it's the same thing as here, the same pattern. So this is our A, this one, this A here, this is it. This B here, this is it. This C here, this is it. Right? So now, as a student of market structure, you already know, without even using any indicator. As you can see, I'm not using any indicator. You already know that we already have a bullish structure. So what you are waiting for is you are waiting for price to come into this zone. So therefore, you will now put your, you put your Fibonacci retracement and do this from the low of that swing structure to the high of that swing structure. So what you are expecting is you are expecting price to do this. Price is going to do this. Price is going to do this to come into this zone. Most time it will come and take out this low. Okay, to come in and take out this low and do this, and then continue that trend. So let's see what happens. Just pay attention to what we have here. So let's see what happens now. Give me 1 minute. Let me do 3. Okay. So what you will notice is that price came back into this zone from here. Okay. Because this move is just starting, most times it might not necessarily come here to take out the B. But most times it will come back into this zone. Which, remember the last time the last webinar that we had, I said price will come, we tap into the 50% retracement of this move and then take out the high. So where's our you see that that's exactly what price did. Price came into this 50% move retracement, Fibonacci retracement, and then move to the upside. Okay, so I'm gonna take out all this place so that I'll allow this to play out, and then we are going to identify all the swing structure as price is moving, and that's one assignment I'm going to give you on the Telegram group. Please make sure you do that assignment. I'm going to allow this to play out. Don't forget that this happened from October 2023. All right. So we're going to see what price is doing now. And I'll tell you why I took a sell from that spot. Okay. So good. So if you notice that at each spot, price keeps printing new swing structure. So as a market structure student, what you want to do is to keep identifying your swing structure at each spot, at each move. I hope I'm making sense. At each move. What you want to do is you want to keep identifying each swing structure. So for example, this spot, let me quickly, this spot right here, is where the move started from October last year. And then we have our first swing structure. Yeah, this is our first swing structure. Okay. Then we have price do this. Price now do this. Price did this. From a structural liquidity and took out this high. Came down, and came to this spot. So I'm going to be identifying all the swing structure. So as price is moving, as a market structure trader, you need to, as a market structure student, you need to keep identifying each swing structure so that you are following price. Now, we have a break of structure here, price pullback. to identify each swing structure will be the previous low and the new high. So our new swing structure now is this place, which is the previous low, and this new high. That's our new swing structure. All right. So if you take your fib from here to here, you observe that price coming to your 50%. Price for each swing structure, price will come into your previous, into the 50% retracement, Fibonacci retracement, like this, like so. So after price has taken out this high, after price has taken out this previous high, we printed another low. This another low. So from here to this high becomes our new swing structure. So from here now to this place now becomes our new swing structure. So you expect price to what? To pull back. At this point, price did not actually, at this spot, you will notice that price is very close to our new, to the 50% retracement. And the price bounced back. And then we came down again. So now we form another swing structure. This spot, at this spot becomes our new swing structure. Here is our new low. So from here now to this spot becomes our new high, becomes our new swing structure. So from this spot to this spot becomes our new swing structure. So I'm going to cut off this place so that you see what I'm saying. Once you can, the most difficult part of market structure is identifying your swing structure. Once you can identify your swing structure as price moves, in fact, trading becomes like a it becomes like you are printing money. I'm telling you. So now we do this. Let me cut off from there. So now we have a new swing structure. Let's focus here. So this spot is our new swing structure. So therefore, so I'm assuming that, so as a trader, you're assuming that price has not printed anything at this spot. There's no, as you can see, there's nothing. So now you're anticipating price to come into this zone. So what you want to do is to put your Fibonacci retracement like this. And then you are waiting. So two things you can do. Once you have identified your swing structure, your new swing structure, you can sell into this zone, which is what I'm doing, which is what I did last week. Now you now want to say, okay, this is my new swing structure. I know that price will pull back, so I'm going to sell into that zone. I'm going to be selling into the zone. So you do this. You say, okay, I'm going to sell into the zone from here, at least into that 50% retracement. All right. So let's see what play out here. Sorry, I think I made a mistake there. Give me a minute. All right, so I made a mistake. Give me a minute. Let me correct that mistake. Give me a minute though. Okay, this is our new swing structure. Pardon me, Jerry. Price has come into this zone. Price has touched this place. So this is what we have. We have price do this. Right? And don't forget that we are looking for price is bullish, right? So we're going to say Let me, pardon me, there's a, so from year to year is our new swing structure. This is correct. From year to year is our new swing structure. I'm supposed to do this. I'm supposed to actually do this. This is what I wanted to do. Pardon me. Because price is bullish. Give me a minute. This is what I wanted to do. Because price is bullish, right? Yes. So I'm saying that price, since price has come into this zone, I've identified this swing structure, these two, year and year. So I already know that price will come into this, price will move out of this zone. So I'm going to have my long. Sorry, my long. Where's my long? Okay, my long. Okay. I'm going to have my long like so. I hope I'm communicating. So we are still dealing with pounds USD. Okay. So as you can see, price came into this zone, the buy zone. So now the current trade that I'm in, as you can see, I already identified my swing structure. This is my swing structure already. But before this move, there's another swing structure. Let me remove this thing. Before we have this move, before price did this, there's another swing structure which I'm going to identify. Just notice how I always identify swing structure. Yeah. This is the last eye. If I'm price, guys, let me know if I'm communicating. So price has done this. Sweep. Price has swept that low, came here, and form another low. So we have another swing structure. At each break of a new high, to a new low, we have a new swing structure which you want to trade from. So your focus, like I explained at the beginning, is now within this zone. Within this zone right here, this one. This from here and to this place. Okay, I hope I'm communicating. So from here, pardon me, not that place. From here to this place, sorry, these are our swing structure. So from here to here is our swing structure. If you put your fib, because price is bullish, you will notice that price pull back into the 50% retracement. Price did this. And then, so now our latest swing structure now is where I'm trading from now. That is where I took my GU buy. Sorry, my GU sell. So I'm going to put that one right here. So each new low and each new high becomes your new swing structure. So now price has formed a new swing structure. So right now, I'm seeing this trade though. I'm seeing this sell trade. I'm going to show you now. So right now, I'm expecting price to do what? To come into this zone before we continue that uptrend. So I'm expecting price to come into this zone. And I've taken a position on this pair since almost 2-3 weeks, 2 weeks now. And I'm still in it. So, but if you now go to the weekly time frame, let's go to the weekly time frame. So this is where we now have the full swing of that move. So we have, at this point, we now have our structural liquidity, which is the last high before the main high. This high right here. This last high before the main high. So I'll need you to go over some other pairs. If you go to AUD USD, you see the same thing. AUD USD, where is it? AUD USD is the same thing. You see that I already identified my swing structure. I already identified my swing structure. So at each move, you want to identify your new swing structure. Okay, this on the daily time frame. I already identified my swing structure, and I also already identified my structural liquidity. Don't forget the structural liquidity. I'll drop the video on the group, please. I can't go over everything again. Go and watch it. Go and watch those videos. I already explained. I've over explained this part. This part. So our whole swing structure for this move is from here to here, because the move started from here. This move actually started from here to this spot. So you will notice that at each pattern, price keeps printing swing structure. So as a market structure student, you want to, first of all, make sure you are identifying that structure so that you can trade, you can follow price. It's very, very simple. It's not difficult. It just dependent on you, studying every now and then. Make sure you are watching all these videos. I hope I'm communicating, guys. If you are following, let me know. Okay. So we have a swing structure from here to this spot. Is our swing structure, and this is our structural liquidity, which has already printed. And we say, as you can see, we have a strip of this high, of this previous high. This is our structural liquidity. Price are taking out the structural liquidity. So now our new swing structure now, where I'm going to be focusing, where I'm focusing now, is this spot. So I expect price to do this. Just watch for AUD USD. Make sure you are watching it. I expect price to do this, to come into this zone or tap into this 50% retracement and continue to the upside. All right. So in the next couple of weeks, I'll be watching this. I'm seeing this trade anyway. I'm seeing this trade. If you go to your weekly time frame, you will see the same pattern. It's the same thing. So having said that, let me take I'm going to take one or two questions. Some people ask some question in the book, but before I do that, I want to talk about there's a prop firm, there's a broker. It's actually a forex broker known as Axie. Let's go there. Let me quickly talk about that. Okay. So this broker, they are based in South Africa. I'm in talks with their representative. I'm actually in talks with their director in Africa, Axie. They are known as Axie. And they offer, it's actually a forex broker, but they also offer capital allocation. I don't want to you can call them a prop firm. They also have like a prop firm, but it's not like the regular prop firm, like I said in the group. The regular prop firm will say, okay, maybe you buy a $10,000 account with $100. When you break the rules, let's say you have lost 10%, you will lose your $100. But for Axie, you will not lose that your $100. Although the minimum you can join with Axie, I think it's about $500. Let me show you what their plan looks like. I'm going to be dropping the link in the group so that if you want to sign up. All right. So the minimum you can do is $500. The beauty of this broker is that this your $500 is your $500, right? You cannot lose it if you don't have margin call. That means you trade it like you normally trade your account, okay? Because it's your money. You fund your account with $500, and then they watch you as you trade. You know, after some time, I think you must have done. All they need you to do is 5% on this $500, which is about 5% of $500 is about $25, Abby. 10% is $50. So they want to see how profitable you are, whether you're a very good trader. Okay. So they're going to watch you, and you have 30 days. Okay. Within that, these 30 days, even if you don't meet the target after 30 days, you can carry it over to the following months. That's why I like this program. And I'm already partnered with them. I funded my account I think I'll start trading the account on Monday. You know, I have, and everybody will start from this seed account. Everybody have to start from here. So you fund your account with $500, and once you have done 5%, your profit target is 5%. They will allocate $5,000 to your account. Okay, don't forget that this money is your money. This is your $500. It's still your money. You cannot lose it if you don't have margin call like you are trading normally. Okay, so this is your $500. It's your $500. Then you must make, before they can allocate $5,000 to you, you must have made 20 trades. Okay, and let's say you don't make up to 20 trades in let's say in September. Let's say you make 10 trades. You can carry it over to the following month of October. That 10 trades still counts for you. So by the time you make that 10 trades the following month, they add it to the previous month, which is the other 10 trades. So already you now have 20 trades. Okay, so they add it, then you move forward. Then they will allocate 5,000 to you, and then I think the first stage, I think they'll be sharing 10% with you. They've updated this their flyer. It's 10% actually. I think it's 10%. Then you move to the next stage. At this next stage, you must have at least $1,000 that you are trading, because they want to see that you're also committed. You're also trading with a particular amount, right? Before, the minimum you can trade with them is $1,000. So I think it's recently they just reviewed it. I'm talking to their director, to their representative, to their main representative. They have their office in South Africa, but they accept every African country. It doesn't matter with Nigeria, Ghana. You can open an account with them. I'll drop the link in the group at the end of this webinar. So you have for the second stage, you need $1,000. Okay, when you make 5% again, they will allocate $20,000 to you. On the other stage, the next stage, you need $2,000. Okay, when you have done 5%, they allocate $100,000 to you. At $100,000, you have a profit share of 50,000. 50%, sorry, pardon, 50%. But you must not have your loss must not be up to 10% though. If not, they will send you back to the seed stage. And it went on and on up to $1 million. At $1 million, you will need 4,000 from your own account, from your own money. I'm going to bring their rep. I'm talking with the guy probably this week or next week. All right, so that it's going to throw more light. But I'll be dropping the link in the group. You can just sign up with them, look at their platform, play with it before you fund. All right. So let me take some questions that some people dropped in the group. Then we'll move on. Let me quickly show you some of the trades that I'm in this week. How many people remember this our trade? This our USD CHF that we've been watching for like 3 weeks. Sometime this week, I'm going to be talking about. I'll find time to talk about Kusimodo retracement. This kind is known as Kusimodo retracement. You will notice that before each major retracement, you have like a continuation candle. Like a continuation candle. This second candle. Look at what price has been doing. Price has been crashing. And then at the spot where it is supposed to have retraced, we now see a major like a bearish engulfing candle. Like a bearish engulfing candle. For a lot of people that does not know what this is, that this is a reversal candle. This is actually a reversal candle. They would have said, this trend wants to continue. They'll jump on a sell. And this is what a lot of brokers do. I'm going to show you. I'm going to show you. I'll be talking about it probably. I'll look for time probably this week. If you go back, you also see the same thing here. Look at the same thing. Look at price. Price has been buying. It came here, formed this big bullish engulfing, this bullish candle. For someone that does not understand what price wants to do, they would have jumped on the buy here. But meanwhile, this buy candle is telling you that price is about to reverse. So that was why I jumped on a buy here. When immediately I saw this Kusamodo candle, this Kusamodo retracement. I'll explain it sometime this week. I'll look for time. Probably we just have like some couple of minutes session. What does it? So it's going to help your trading, because that means you can add this to your market structure knowledge and also to your liquidity knowledge. All right. So I took a buy here because of this move. Let me show you the same thing. You see the same thing on guys. I hope you are seeing my screen, because I'm not seeing nobody's dropping no comment again. It's like you guys have left me to my matter. Please, I need comments to, or else maybe we should call it a day. Please, before I continue, I need comments. Drop me comment too. Let me know you are following me. Then I'll take some questions also. I also take some questions now. But let me quickly show you some of the Kusamodo retracements that I was talking about. Okay, please, I need to know that you guys are following me. Please pay attention. I beg. So now you will notice, let's go to Euro USD. Let's go to Euro USD. Okay, let's go to even pounds USD. You see the same thing, on this pounds USD, this market see this candle here, this one, this bullish candle. This is this Kusamodo retracement. This one. You know that price has been buying. Price has been buying, has been bullish, and then it came there. We saw the first bearish candle. I'm actually on the daily time frame. So we saw the first bearish candle right here. Right? So normally you expect that price will come down. But this price but market will now do something. It's going to form at this spot where price is supposed to come down, which is our liquidity point, where price is supposed to come down. You now have a major shot to the upside to shake out people. To shake out people. And then price will now continue to downside. So some people will call it market manipulation, which I actually agree. QML, thank you. Emmanuel, yes, that's QML. That's a Kusamodo retracement. So price will knock out people here, brokers. And I'll tell you what is happening here. Is actually market manipulation. What normally happens is that brokers, because as you are placing trade as a retail trader, the brokers, they can see from their order book, they can see that a lot of brokers, a lot of traders, retail traders, have already positioned there. They place their what do they call them? I'm trying to remember that. They place their pending order here like this. They have done this. They have done this, right? They have done this, waiting. They have done this, like they have done this. A lot of retail trader. Pardon me, let me look for that thing again. Shorts. It's a short. So a lot of retail trader most times will place their trade like this. And because the brokers can actually see from the order book, they can see that there's a lot of pending order around that zone, which is our structural liquidity. If you go to the weekly time frame, you will see it clearly. You see, this spot is the last eye before the main eye. So you will see that there's a before we had this print, before market print this buy or sell, this sell right here, you will notice that we already have a lot of traders place their pending order here. So they place their pending. So broker already they already see from their order book that people are placing order, sell order here. So what they will do is that they will now buy. They will buy at this spot. A major buy. Let's say they will now say, okay, we need liquidity. So they will use this place as liquidity. So they will knock out a lot of retail traders. And then they will take profits. They will knock them out. So your stop loss become the broker take profits. And after they have knocked you out, then they will now place their sell. The market will now start selling. And this will happen every time. Every freaking time. This on pounds USD. Let's check Euro USD. You see, it's the same thing. See, it's the same thing. Look, Quasimodo retracement. See, you notice that we now have a major bullish candle. A major bullish candle. Let's check AUD USD. The same thing. Over and over again. Every time they do it. See this big candle at this spot where price is supposed to come down. It doesn't make sense that you are having a bullish engulfing at the point of resistance. Normally, you can have a bullish engulfing candle. This is a bullish engulfing candle, within the buy zone, which is normal. This is a bullish engulfing. This is another normal bullish engulfing. They do it every time. They don't do it only at the resistance spot. Though. Let's check USD CHF. The same thing they do. See, we have this Quasimodo. Last week, I was calling for buy for USD CHF, and I was telling, I think, what's the name of this guy? There's this guy in the group that was asking me. I told him to hold on because I was expecting to see. At the point that I told him to hold on, we only have this candle, this one here, this small one. Because I knew that we are going to have a Quasimodo retracement at this spot. And then what you do, and then what you are going to notice is that we now have this pullback, this major pullback, sell-off. Sorry, this major sell-off. So for a trader that does not understand what is happening around this spot, they will think price. I used to be a victim of this thing, of this Quasimodo. I'll now go and place a sell. I'll say, this is going to sell. And then I have this reversal. All right. So that is that for that. So James said, please be specific about your daily advice. Sunday, Apollo James. I think you have been sleeping in the group. I always tell people this. I always play that signal in the group. Go and check the group. I always say price. It's about to rain. Abi, guys, please drop me comments in the comment section. Last week, 2 weeks ago, I've been saying that. In fact, 2 weeks ago, when I was selling Euro USD, I remember one guy sent me a message, say, Alga, I sold Euro USD first here now. I sold my first Euro USD that I sold was here. Go to the Telegram group and go and check. I sold. In fact, before I saw this Quasimodo, I sold Euro USD. And I said price is about to turn for Euro USD. And when price went up like this, I sold again. Let me even show you even for AUD USD. I did the same thing. I sold here first, price push up, I sold again. Let's go to AUD USD. Let me even show you the trade itself. I'm seeing the trade to let you know that I'm seeing the trade. Where is AUD USD? So this is AUD USD. I first of all sold there when I saw this reversal candle. Then I saw this this major pushback. Then I sold again. I'm in 3 position on AUD USD. And I'm still holding that position. This is a live account. If you look at this spot, where's my, you can see, it's a live account. This is not, I'm not telling you cock and bull story. This is a live account. Thank you, Tokwe. And I actually placed this in the group. I spoke about it. I said AUD is going to sell. And AUD is going to sell up onto the 50% retracement, at least. That's why I'm still holding this position. If I, let me even, where's my, give me a minute. So this is a live account. Oh. This is my, as you can see, this is my Oanda account. This is my Oanda account. If I go to, you can see that the trade is running. In fact, this trade last week on Friday, this whole position was about $3,000. But I know that we are still going down. So I left it. I'm going to leave it to run. So when you understand market structure, you will know where price is going. So, but we have pullbacks, which is normal. So I'm looking forward to even add more to, especially to USD CHF. Whatever you do this week, please don't sell USD CHF. USD CHF is going to buy massively. Make sure you are not selling. Make sure you are only looking for buying opportunity. Let's go to USD CHF. So let's go and check USD CHF. So USD CHF is what? As you can see, I'm already in the trade though, and I'm praying, I'm praying to God that price come down a little bit more so that I can buy. I want to buy. I even want to add more to this position because I know that we are going up. Because this move is just starting. As you can see, we already have our Kusimoto retracement here. This candle, and then we also have our structural liquidity taken out already. This one, these are structural liquidity. So these are structural liquidities be taken out. So yeah, so we have this our structural liquidity taken out. So price is about to push to the upside. As you can see that I already have my structural liquidity. From year to year is my structural liquidity. I already have it marked out. So whatever I'm teaching you, is what I'm doing. This is the way I trade. And this happens in the market every time. Every time. If you are trading on the lower time frame, you might be having a lot of difficulty identifying this stuff, this structure. So I advise at least start from daily time frame. Daily 4 hours, you will also see it. But me, I like to see it at a glance like this. It makes my work very easy. So now I'm expecting I'm actually expecting USD CHF to do this, to come into this zone and sell off, which is why I'm still holding that position. Somebody was asking that they always come out of the trade on time. Once you identify the swing structure, it's easy for you to follow trend like this. So I'm expecting to follow the price to do this. So everybody in the group, we're going to be watching USD CHF, AUD USD, pounds USD, euro USD. Those are the trades I am in right now. There's another account where I have pounds USD stacked. I've stacked it. I've sold it already. My position in that trades in those trades is already, I think, plus or minus. I'm already up by over 200 pips. I think I have about 6 positions. So sales. I was just selling at that top. See, if you understand market structure and you understand liquidity, that is it. Trading becomes a piece of cake. It becomes a piece of cake. And you can only fully grasp it when you study and study, and you need to keep studying. How many people, I love asking this question. The first time you drive, when you started learning how to drive, and let's say you are living on the island, whoever is teaching you will say, okay, please be driving within the streets. If you want to take your car from the island to the mainland, the very first time, you are going to crash. So, but then you probably be driving within that neighborhood first, within your neighborhood first. As your hand becomes stronger and stronger, then you can now say, okay, I'm going to, then you can drive within the state. You can drive from the island to Ikorodu, from island to Ikeja, back and forth, right? As you become more confident, then you can now drive from say Lagos to Ibadan, right? So the same thing with trading. It's continuous. You have to keep continuing learning. As time goes on, you'll be able to drive from Lagos to Sokoto, from Lagos to Abuja, right? Because now you understand the basics. But you will agree with me that when you want to go to Abuja, you are not going to go to another driving school, right? You don't need to go to any other driving school. The only thing you are doing is that you are building on that foundation of you knowing how to drive. It's the same thing with trading. It's continuous. That's why you need to keep every day. You need to show up. You need to keep showing up every day. You need to keep showing up before, and then you need to give it time. 1 year, 2 years, 3 years, 4 years, 5 years. Before you, and even at that, you still need to keep showing up. I need to keep studying. Today now, I've gone through the course I bought for market structure. Between Friday and today, I've gone through the whole course twice. And that course has 14 videos. So I always laugh when I see some people, when you say we're having webinar, they won't show up. They say, I'm tired. I laugh. And they want to learn how to trade. All right. So somebody is asking for gold. Okay, let's quickly check what gold is doing. So this is gold. I think it's who is that? I think it's James. So for me, gold. I remember we had this webinar we had 2 weeks ago that I was saying that I will not be buying gold around this area. I don't know who was the person that was telling me that he's still in a buy position, and I was telling him to be careful. I don't know who that person is. Somebody in the group was saying that I'm in a buy position, and I say you should be careful around this area because we already have a lot of gold is showing a lot of retracement move. So as you can see, I already identified although I'm not in gold at the moment, I was in buy. I think I rode this position up to this point. I'm out already. So I'm waiting for gold to pull back. So if you notice that I already identified my new swing structure. So at each point, any pair you are trading, what you want to do, you want to identify your new swing structure. So this part to this point is my new swing structure. So I'm expecting price to do this. I'm expecting price to pull back, to come to me, either to this zone. Price will either come and form support here. I'm expecting price to actually come here. Then before we continue this uptrend. Gold is in a buy position though. The reason why I don't like picking gold stop is that sometimes gold can be very crazy. Because in a buy position, most times I don't even like selling it. So I'd rather wait for it to come to me. And if it doesn't come to me, I'll let it go. You know, gold is very volatile. So I don't mess around with it like that. Until I see a very good retracement, then I'll buy. I think I took this buy. Yes, I took this buy. I took this one. Yes, I took this buy. And now I'm waiting for gold to come here. I'm actually waiting for gold to come here before I jump on a buy. But like I said, as a market structure trader, You don't buy at the premium zone. This is the premium zone. And you don't sell at the discount zone. You look for selling opportunity here. You do this. Sorry, pardon me. You actually look for selling opportunity here. You look for selling opportunity here and buying opportunity here. If you truly understand market structure, this is what you'll be doing. So this is what you'll be doing every time. Every time. So you'll be looking for buying opportunity around this zone and selling opportunity around this zone. That's for gold. All right. Let's check pounds. Let's check Bitcoin. Bitcoin is doing the same thing. See that Bitcoin has been in this range for since March this year to August on the 5th, we have this candle. So you can see that I already identified my new swing structure. This from year to year is my new swing structure. So now then you see the way Bitcoin has been bouncing around. You notice that price has been bouncing around this zone. Price has been, selling off around this zone and is buying around this zone. This is actually on a daily time frame. All right. So so that is that about Bitcoin. Okay, somebody is asking for USD I already addressed USD Do yourself a favor. USD is in a buy zone. Oh. So when I think market has opened, let's even see what price is doing. Give me 1 minute. So let's see what price is doing for USD. So soon rounding up. So let's see what price is doing. So USD is what? Is in a buy zone, as you can see. You don't want to sell around there. It's a trap. They are selling here as a trap. I know how can one easily identify discount at premium zone? I'll drop I know Ayodele, are you on the Telegram group? If you are there, I'll drop the basic market structure and the liquidity video. Go and watch it. I can't go over that. I'll explain. I can't be explaining that again. But I'm going to be putting all this together in the course that will be ready by January. So we are looking at putting that price for the course and the for the course and the for the course and the and the and the mentorship program. We're putting the price around, say, either $150 or $200. I need serious people. All right. So now, if you look at as soon as I'm still talking with my team, as soon as we confirm the price, I'll drop it on the group. So for USD Sunday, James, please, you that you say we should be talking about what price we do. Be looking for selling for buying opportunity. Pardon me. So price can do this. I'm expecting price. Let's go to the 4-hour time frame. I'm expecting price to do this because we already have a break of structure, a minor break of structure. So I'm going to be expecting price to do this. Price will pull back, and then buy off. So I'm already in a position, but I'm praying that I'm hoping that price do this, and so I can add more to my position. So this is what when you study hard and then you understand market structure and liquidity, this is what it does for you. You are anticipating what price. You are not predicting what price will do. What you are doing is that you are anticipating what price will do. That's what you are doing. You are anticipating it. So I'll be waiting for price to do this. I think on this 4-hour time frame, You see that price is already, I think the market has opened now, right? Market has opened. So price is looking like it wants to come down. I'm praying that it comes to this zone so that I can add to my position. So that's for USD CHF. For AUD USD, however, AUD USD is still fresh. Where is it, Seth? I'm also anticipating price to come to this zone so that I can sell. Okay. Also for pounds USD for me, the move is just starting. That's not even started. This sell-off is just starting. At least till NFP. Please, I'm begging you. I don't trade NFP. So all the positions are across board. I think I'm in about, in all my accounts, I think I'm in about 15 positions across board in about 4 pairs: pounds, USD CHF, Euro USD, and AUD USD. At those 4 pairs, about 15 or 17 positions. I can't remember everything now. So, and by before Friday, maybe on Thursday, I'll close out all the trades because of NFP. I don't mess with NFP. I don't mess with NFP. Then on November 15, the Federal Reserve, they are going to announce the rate cuts for US dollar. I don't mess with them. Also, I won't be in any trade. Then CPI, Consumer Price Index. I don't also mess with those 3. I don't mess with them. Any other thing, I'll just leave my trade. That was why somebody was asking me last week Thursday, because there's a major news, a high impact news on Thursday that should we still leave the trade running? I say yes. Now I say not those high impact news that is different from NFP, CPI, rate cuts. Those are the 3 I don't mess with. Once they are coming, I close on my trade or I lock my trade. If I'm in a very sound position that maybe I've done like a good number of pips, I'll just lock it and leave it. So now for pounds USD, I feel pounds USD has not even started moving. So I'm expecting a pullback also. I'm expecting a pullback to this zone, then a sell-off. A pullback, then a sell-off. So if you go to the weekly time frame, always check your weekly time frame. Look at what pounds the way pounds closed last week. It closed with this very strong major resistance candlesticks at this structural liquidity spot. So this tells you that we are coming down. And if you put your Fibonacci retracement, you will notice that price should come into this zone before price keeps pushing to the upside. All right. So going forward, somebody says make sure the membership fee and cost are affordable. Okay, don't worry. As time goes on, before the end of this month, I'll drop what the membership fee is going to be. The cost, we're going to be having 2 things, and we are going to be having 2 courses: forex trading and crypto trading, because I trade crypto too. So those 2. Then later I'm going to be adding stock trading because I started trading stock too. And the beauty of market structure and liquidity is that you can trade anything. Whether you buy the forex trading course or you buy the crypto trading course, it's the same thing. Once you master this market structure and liquidity and POI, point of interest, you can trade any instrument. You can trade any market. That is why you see that I can check. We are checking Bitcoin. We are checking currency. We are checking gold. We are checking NAS. You can even go to NAS 100. You see spot all this pattern. Okay, you see NAS 100. You see S&P 500. You can trade anything tradable. All right, so that's why this knowledge is something that you cannot. Is a knowledge that will ground you in trading. This knowledge takes away guessing. You are not guessing. You are anticipating. You are not entering a trade and you are scared. You enter a trade and you say this, and then you go to bed. And then the more you do it, it's just like driving. That example I gave, The more you drive, the more confidence you become. The more you trade, the more you do it, the more you see these patterns, and you trust the pattern. You have to trust the process, and you trust the pattern. The more confidence you build, and the better you become. Will you make mistakes? Yeah, sometimes you make mistakes. Probably you enter the trade too early. Probably you anticipated that move too early and price into your stop loss. But that doesn't mean you should not, try again. And that's why money management, maybe during the week, I'm going to talk about money management. I've been trading one particular account. That account I showed you, even all my accounts, the last 3 years or 4 years, I've not had margin call. Do I take losses? Yes, of course. There are times I probably I anticipated the move too early, and I enter and I take a loss. Yes, I do. I just say, okay, this one is a mistake, because you make mistakes sometimes. But plus or minus, if you understand this and you keep practicing it every now and then, you are using good money management. That's why I don't over leverage my accounts. If you are using good money management, you can never blow your accounts. You can never blow your account. All right. So I don't know if anybody have any other question. If there's no another question, probably we'll have to call it a day. So for the membership and cost affordable, don't worry, during the week or next week, I will talk about it. Then also, you spoke about the don't forget our Axie. I'm going to be dropping the, let me share it again. I'm going to be dropping the link in the group, in the Telegram group and the WhatsApp group. I know are you in the WhatsApp group? Let me look for our Telegram link, please. Give me a minute. Give me a minute. Let me look for the link. So I'll drop it in the. Okay, so you're welcome. So I know Ayodele. I'm gonna drop you the. Let me drop the. If you are not in the WhatsApp group, use that link to join. Click on that link to join. Then if you want to sign up for the Telegram link. Sorry, that's the Telegram link. Don't worry. Once you have joined the Telegram link, you don't need the WhatsApp link, because it's the same thing. Then on the Telegram link, that one is interactive. You can ask questions. The WhatsApp group is not interactive, because that one is just a community. So you can join with that Telegram link that I just dropped. Then let me drop the Axie, this broker that offered this beautiful the one I spoke about earlier. Give me 1 minute. Let me look for the link. I want to look for the link for those that want to sign up with that broker. Okay, I'm going to drop it here. Okay, so I'm going to drop that link for the. I should send the WhatsApp link. Sunday, are you in the Telegram channel? So that's for Axie. If you want to join the Axie, it's free. Just open an account with them. Even if you are not starting now, just open an account with that link. Then in the WhatsApp group and in the Telegram group, I'm going to drop the link again. But you can just click on the link and and open an account with them. The WhatsApp link. Okay, I'll look for it. Let me see. Let me look for the WhatsApp. Give me 1 minute before we call it a day. Let me see if I can get the link. Okay. So that's the WhatsApp link for people that want to join the WhatsApp community. That's for the WhatsApp community. All right. So I'm gonna call it a day. Yeah. So I'll just give it some few minutes for you guys to see it before I call it a day. All right. So guys, studio. You will not understand everything overnight. Uh-huh. Make sure I'll be dropping this video. I'll drop the link in the group. Watch it as many times as possible. Or if you have not subscribed to my channel, make sure you do so that you can see my videos. You can go through the videos. You can go through the library of the videos that I have. Go and watch. There's a lot of educational videos that you can watch on market structure and liquidity. That you can, that way is going to lead you. That's going to it's going to help you. It's going to help your trading journey. And like I always say, you cannot afford to watch a video once and you feel that is it. No, you need to keep watching it. The course that I took, that I said I took for market structure, that really changed the game for me for market structure. I cannot tell you how many times I've watched those videos. 14 videos. I cannot tell you. This weekend I've watched it twice. What it does for you is that each time you watch it, you always get new thing. That is how to be a student, right? That's how to be a student. You need to keep at it every now and then. All right. So I'll see you guys during the week. Have a great, beautiful week. Have a beautiful, beautiful, beautiful. Where's my all right. So good night, everybody. Good night, good night, good night, good night, good night. How do I even end this? Good night.